Yo, what up, guys? It's Saturday again. So let's do simulation, right? Backtesting. Today I want to talk about low resistance liquidity. I get that question asked a lot. So let's backtest some low resistance liquidity versus high resistance liquidity. Let's pick a random date first, right? As always, get the date 2nd September 2019. Let's go with Euro USD. 2nd September 2019. Yes, 2019. September. Oh, it's actually the start of the month, and that's NFP week because it's the first Friday of the month. So let's go to the next week because NFP week is not too favorable to trade, right? As we all know. So let's do this. Right, so let's pull up the charts. Now, when you trade, you really want to go in the direction where the algorithm has no trouble going, right? So price delivery is easier to places where there is low resistance liquidity. So today we're going to identify how to look for those. I'm not going to go to the 5 minute. We're just going to... I'll do the 5 minute too. That's fine. Right, so the charts, right? You can skip this on the YouTube, right? If you don't want to see me pull up the charts, which I understand. But we gotta do it. Let's do the Asia range and all that kind of stuff, right? Weekly open. Alright. Let's go from top down first, right? So what happened in this current day? This is the monthly time frame. So the first week of the month. Let me see, the first week of the month. We already took out previous monthly low. So that's actually favorable to go bullish, short term at least, afterwards. Where does it want to reach on the monthly? There's nothing really clear over here. We've got sort of a trend line going on, but this is a monthly time frame, so we can ignore that for now. The weekly is really tight. It's not really showing anything. We zoom in a little bit. So this fair value gap on the weekly is being respected at the moment. We've cleaned these equal lows. Now we took out this low. Let's see what the daily gives. Right. Right, so we got some more information right now. Let's identify highs and lows, right? And where liquidity can reside. So we have this low over here, which got liquidated. Now, if we take this last 20 days, so we have this intermediate term high within this whole range. So this could potentially be a target. Should we hold this fair value gap on the daily, right? So let's mark out this daily fair value gap. And this is going to be key to know if we hold this, we can start to trade up higher and target this high over here. For now, we're still in the bearish order flow, so we got to keep that in mind. Let's go to the 4 hour. All right. Zoom out a little bit. Are we forming a market maker model? That's something you got to understand, right? What side of the curve are we currently on? You want to identify a original consolidation, right? So I can already see one over here. Let's make it green, because it's always green, right? That's hella green. Just for reference, right? So we have the original consolidation here. The smart money reversal down here. Does it make sense? It does make sense because we took out previous monthly low, right? So that's a higher time frame PD array, old low, old highs, right? Got to consider those. Now we're breaking up. And price definitely wants to go back into a discount, right? Before we're gonna go up further. So let's see how Monday trades, because I don't trade Mondays. So let's skip Monday. Alright, so did we poke into that fair value gap? I think so. Just ever so slightly. The thing with the simulators, I cannot see DXY, so I cannot compare it. That's a shame, so I cannot look for SMT, right? Which is powerful when you're trading certain reversals. Right now, we dipped slightly into this fair value gap. Started to trade bullish straight up from the weekly open. So if we have the weekly open, just wicked in, took out this low, and started to move up. So I'm not 100% convinced this is the run to make the low of the week. So let's see how this London session is gonna trade. Let's go to the sessions. All right, so this is New York midnight, right? Let me skill fix this a little bit. Now let's draw out our New York midnight price, which is important, right? We want to buy above, sell below it. Now let's look at the narrative, what is happening currently. Let's go to the 4 hour, right? So we just recently took out this high, that's why we're retracing. Target is this high up here. So do we want to go in discount further and take out these short-term lows within this whole range and then dive deeper into the daily fair value gap, or are we just going to respect this fair value gap up here? Now let's determine if that's in discount. That's important too, right? So if you have a fair value gap and you're not sure if you can enter on it, it has to be in discount. If the fair value gap is in premium of the range, then don't look for that one for a buy. Right, so it is in discount, not in OTE, but it is in discount on the 4 hour. So let me look, where's the low resistance liquidity at the moment. So we took out this high already, so this it didn't have juice to go up higher, so it looks like there's high resistance up here. And the reason is normally you want to see a high taken out, retrace a little bit and then move up again. There is this big order block right now, so we have to consider that one, right? This one. And price is reacting off it. So this is a 1 hour perspective. You always want to go with a 4 hour, but definitely if you start to trade up and start to show decline, we want to go down because there's still liquidity in this gap, right? We just slightly dipped into it, so it's not really convincing. You want to see like a 10 or 20 pip sweep below an old low in a higher time frame POI, and then start to move bullish. That's a better, at least I prefer that. So let's see how the day opens. Right, so we're trading straight up. Let's see if we can take Asia high and Asia low. Let me check news first, by the way, because we had NFP the week before, right? This you can see it up here. Now what do we have? We have on Wednesday core PPI. We have some we have interest rates for the euro on a Thursday, so that's going to be volatile as hell. So the market conditions might be a little bit choppy before the interest rate release, so we have to keep that one in mind. Right, so we're taking Asia high. Now if we fail to break above this high, we're going to look for shorts. Right now we're leaving equal highs, so it's not favorable to look for shorts at the moment, right? Because we have this high up here, which is almost equal. So we have to wait for more price action. Right, so London definitely wants to go bearish. So now we can start to look for an OTE. And the reason is we're leaving low resistance liquidity here, so the price can draw back into it. And low resistance liquidity in the form of a fair value gap or liquidity void, right? Now this is only 7 pips, so it's not too much. Looking at the 4 hour, we did dip into this fair value gap, so let me scale fix. Right, so we did take out Asia low and rejecting, so actually we gotta stay vigilant about this one. Even though we traded up and we have equal high, so this is actually a target. So this is how many pips? Just 1.5 pip. Yeah, let's look at the 5 minute structure. Right, so we have a short-term high within this new range we created because we took buy-side liquidity, right, and sell-side liquidity. Now we have our new range, so let's draw our FIP. right? So whereas the discount is below here and the premium is up here, now I'm pretty sure we can sell over here with a 8 pip stop loss. Even though it looks like equal highs, we rejected this area for a reason. We're respecting this order block right now, and this order block is holding this order block, so this is a significant area. So let's go to the 5 and put in an order. So we're gonna do it on the 62 level, so that's 6 pips on this order block. 6 pips, 8 pip stop loss, and then what is our target, right? We want to go to the low resistance liquidity, which is down here, which is actually, let's make it a 50 or 60 pip target. Let's do 60, that's fine. So a sell limit, right? Let's go to the 5. Now we wait for price to tag us. If it comes at all, right? It has to come first. So we're slowly trading up, leaving a target behind right now, right? So that's good. But we need to wait before we need to be in premium, right? Otherwise we're just gonna miss it, and that's fine too. So right now we're creating a lower low. So if we adjust the scale, right, we're going deeper into discount at the moment, so we still have to wait. And we're in New York session right now, so look at this price action today. It's not really clean, right? We're just moving up and down from a daily opening price, and that's because we have interest rates in a upcoming week, right? So these type of conditions can present themselves. But going with a higher time frame, we should still go down into the low resistance liquidity in the form of that daily fair value gap, right? Alright, so today doesn't really give an opportunity. We might head into London close and get tagged, but yeah, so we're in right now, right? In premium on a lower time frame order block. So we're up almost 10 pips right now. Let's go let's see if we can go break even, right? Does it make sense for price to run up again? So if we take this new price range we've created, right? We took buy side and sell side, remember? We hit the equilibrium, so it can reject from here and go up further. So we're gonna go break even actually. I would not go break even if we're still trading inside premium and we did not tap equilibrium, but we did. So I'm managing risk. Also look at the time of day, right? It's in London close, so we're 1, 2, 3, 4, 5 hours into New York session. So most of the time price is going to be a little bit choppy and consolidating afterwards. So we're up 1% from this one trade with I would say it's a sniper entry. It's 1 pip drawdown. So that's good. So we're break even, and now we're just gonna let it run. And we're trading away from this fair value gap too, right? This one. So I would not expect price to run above this fair value gap again. So let's let it run. And if it does come, we are break even, and it's fine. So it's pretty choppy, right? So you can see it's indecisive. It doesn't really know where it wants to go. So in these type of conditions, it's better to take a partial, right? And especially before the daily is going to switch to the next day. So let's go to trades and then close. Let's close like half of it, because just secure 0.5%, right? And then let the rest run and have something for our troubles, right? It's never bad. It's never a bad idea to take some partials. So the new daily is opening, right? So that's why we go break even and partial something, because we can still move up higher, right? And looking at the 4-hour perspective, right? Let's go to the 4-hour. We are still respecting this fair value gap with the bodies, so it's still indicating it wants to go bullish. Right, so let's go see if we can find one more trade. So this is the daily opening again, right? So let's draw it out. And this is a Wednesday, I think. Yeah, so the day after today is going to be interest rates, and we're going to see where the interest rates is going to push price to. Looking at this whole narrative right now, we're consolidating, obviously, right, because of interest rates. But I feel there will be like a manipulation upwards, and then with the release of the interest rates, we could trade down into this low resistance liquidity. But we'll monitor that one in a second. So right now, this is the daily time frame. Right, we have this bullish order block, and now we've created another one. So we might as well eject from here. So let's see how London session trades. If it's gonna grab some liquidity on the lower side, but it's really hard to trade this. So better to stay out and see and wait for displacement, right? So let's see what pre-London does. So we're trading below daily opening, right? So we could have a London low of the day if we go to the daily candle, right? We did actually create a swing high up here. So we might draw into this fair value gap today. Yeah, so we're moving down pretty fast. Let me see. So our bearish bias was correct, right? Only if I had my stop loss still up here, right, then I would still be in. But just trade management wise, you should go break even if you're if the daily is gonna switch and you're only like 8 pips up. You might as well get stopped out by the spread or the rollover, right? That kind of stuff. It's always another opportunity to get in. So price always wants to go to low resistance liquidity, right? Which we drew out earlier. And we're already in it. So now ADR has been completed. This is just London session. So when London session completes the whole daily range, it's better to avoid the whole day. Because what is the likelihood that we're gonna trade like further or gonna retrace all the way up, right? And keep in mind the interest rates. So if I would have held on, this would actually hit target, but it's just back testing, right? So this is how we identified low resistance liquidity. Not gonna look for more entries on this simulation. Just a quick little video for you guys. If you enjoyed it, you can hit the like button, right? Subscribe if you haven't. I try to put out some videos. I'm always live streaming right during the week, New York session. If you enjoy those, just hop in. Or join the Telegram, right? I'll put a Telegram in the description. So yeah, guys, I hope you like this short little video about liquidity. Yeah, and we'll catch up in the next video.